I'm Catherine Ross, and I'm here live from the NYC with Jim Cramer. Jim, there is now a real possibility that we are heading towards a tech Cold War. And I'm wondering...
Not a hot war? I don't know. I mean, like half the stuff is only related to the PLA. Remember, the power behind the throne
when you say
China's
PLA, what do you mean by that?
People's Liberation, the Army. And I think that one of the things that Tom Friedman, his excellent piece today, talks about how the projection of military and the stealing of even the of the Lockheed of our blueprints for our planes. And so I think that this is a war that is very similar to, and I've been saying this over and over again, this is 1947, a containment policy. And we're doing everything we can ultimately to force the Chinese to the table or decimate the Chinese. And the president is adamant. Remember, he was very angry at Larry Kudlow for saying that both sides get heard. There's some poll numbers that Carl was talking about today which indicate that it's not a rose garden for the president. I think the president uniquely believes that the Chinese are going to pass $100 billion a year. It's going to raise $1 trillion. Of course, there's a sales tax here that he's not talking about. And that he's had it with Huawei and with a couple of other companies. Now, what's interesting is Judge Koh last night, made a ruling that said that Qualcomm has been a monopolist, and they've been a monopolist to Huawei. So the judge is saying that we have hurt Huawei's ambition to being a 5G power, whereas the president is saying we're not going to let them be a 5G power. So you have the judiciary at odds with the executive branch. This is a highly unusual thing, and we're not quite sure what to do. There's a lot of people who don't know what to do. It's certainly difficult to opine in a world where a judge freshly just said, hey, listen, we favor Huawei, and the president's against Huawei.
Jim, let's go back for a minute, because I want to talk to you about, you just said 1947, and I want to just make sure that everyone knows. So on Friday, May 17th, you wrote in your Real Money column about Trump just cutting off all ties with China, which would be the first time since Nixon.
Yes. The question is, are we trying to roll back the clock before they were admitted to the WTO? And by the way, there's people who keep thinking TPP would have saved it. Bans and Navarro has talked about that very extensively. But do we turn the clock back before they got in the WTO? Do we turn the clock back to when we just recognized them as a nation? Do we turn the clock back to before Nixon went to China? Now, the reason why you wouldn't do that is because you got more than 1 billion people in that country, and that is a good market. The reason why you would do it is because you think you could bring them to their knees. But the problem with trying to bring them to their knees, it's only 3 to 4% of their GDP. So it may not do it. So what you're really hoping is that the Chinese will no longer steal our intellectual property. That's the big issue, okay? They buy the soybeans, they buy planes, but it's intellectual property. And I know from Shantanu Narayan, who's the unbelievable CEO of Adobe, who said to me something really cogent. He goes, we're in China, but it's all pirated. So if they stop the pirating, then the president will agree. But they went back. They were going to, in that last agreement that failed, they were talking about stopping the pirating. They went back on it because the PLA, the hardliners, are unstoppable, and the hardliners have taken over, and the hardliners want us to lose. So we've got hardliners on both sides.
So guys, you can go read Jim's column from Friday over on realmoney.com. Now, Jim, I do want to ask, if we entered into a Cold War, in a tech Cold War, well, but if we entered into a more serious one where we really did start blocking out these Chinese companies, how should investors position their portfolios? What can they do?
We've been talking about United Health as being one of our great pick. Take a look at that, particularly with Biden being what I regard as very soft against the United Healths of the world. CVS will ultimately be a winner.
You listed a bunch of, in terms of Biden, you listed, five or so healthcare stocks?
No, we don't. Yes, all of those are good. We met yesterday with Novartis, and Novartis really uniquely might be interesting. We're talking about maybe swapping out loser Amgen. It's okay. We play with an open hand and go to Novartis. We're trying to be selective. The one that we got nailed on was Kohl's domestically because they didn't do a good job. Home Depot did in retrospect versus Lowe's. That one still works. The weather's nice this weekend. That stock goes all the way back up. So, I mean, the home builders were taken away. I like that. And then Toll Brothers cut the orders. We got to find out a little more about that. But in every case, there's something you can do. But the size of what you can buy diminishes. There's just not enough good ones. I am now, by the way, warming up to Caterpillar. Why? Because there's this $2 trillion infrastructure plan that the president's talking about with Cry and Chuck and Nancy Pelosi. And I always try to remind people that Nancy Pelosi, who I know pretty well, has not been made fun of by the president. Now, I know that's a low bar, but if they do something infrastructure, a lot of Caterpillars, the U.S., remember, they have a lot of plants in China, so it's really hard to ignore them and switch everything to Komatsu because the Japanese are not loved in China either. But Caterpillar down here, it's got to intrigue people. It really should intrigue you. I think it's got like 10 down, like 30 up. That's not bad.
All right, so guys, if you were confused about when he was talking about Biden and I said healthcare stocks, I'm referencing his column from earlier this week where he went on about Biden and the different stocks that you can buy now that he's a Democratic favorite. Now, Jim, I want to move on because I want to talk to you.
The fintech are the other ones that you can.
The fintech?
They're not going to stop buying those, and we've been trying to buy Visa and MasterCard. Just never come. They never come down.
So I want to move on because I want to talk to you about Qualcomm since this is the news of the day. In case you guys missed it, the FTC, the Judge Koh, as he said.
Imagine if Apple had just waited? I mean, that's the way you have to feel. Apple made a deal rather than face the wheel, and now the wheel is turned against Qualcomm. What I thought was surprising was that Qualcomm was clearly losing that case. It was very clear from the questioning, but I think that what drove really easily what drove them to the peace table was they needed 5G, and they knew that Intel wasn't going to be able to deliver 5G.
So what's the read-through for Apple investors?
What should they do?
Yeah, what should they do?
I know this sounds like I'm punting, but we need to learn more. I mean, Qualcomm went up all the way up to the 80s. Qualcomm, the issue with Qualcomm is, what do you do with a company that wiped out the competition by sheer ingenuity? And this flies in the face of the American way, the whole ruling. It'll be appealed. I don't know if it'll win. Apple I think Apple really can't do much. They haven't said anything. But the narrative there is being controlled by a Goldman piece, which is that 29% of their business is in China and that they make a lot of things in China and they can't be able to source quickly.
An impressive number.
Yes, Apple might have, we don't know what's going to happen to Apple. They've not said anything. This Qualcomm loss is a Huawei win. I don't want to recommend Qualcomm. My instinct says to buy Qualcomm stock, but all these analysts upgraded Qualcomm stock after they trumped Apple. And now do they have to cut numbers? I mean, you have to wait. I mean, one of the things that we've learned here, when you have these big down moves, is the analysts then catch up the next day and they cut numbers. So wait till tomorrow. There's no urgency. Feels like it should be urgent, but it's not.
And guys, if you missed the Qualcomm news and you're a little confused about what we're talking about, go to TheStreet.com because Martin Bagerdax has a fantastic rundown of what you need to know about the Qualcomm ruling.
Unassailably the best you're going to get.
Exactly. All right, so Jim, let's move on. Let's talk about stock of the day. Target just released earnings. They beat.
Yeah, now this is tough for me because I knew that Michelle Goss was having a tough quarter at Kohl's. I didn't know how tough. I had kind of felt that she was doing better. Brian Cornell had a plus 40% online, which is really extraordinary. He had great comps. Target is where they're going. Now, the customer seems to be fickle, but the fact is that Target so outperformed the group. So you're getting these winners. Target's a winner. Walmart, believe me, is a winner. I know, and by the way, the tariff's overblown when it comes to Walmart because they have power. They have pricing power and they have scale. Costco's a winner. And then a lot of losers. But Target's not a loser, it's a winner.
It's a winner, and it helped to kind of ease tariff fears.
Well, I mean, like Target, I just had this battle with David Faber about this. There's going to be some price increases, but remember, look at Amazon, and look what it does to keep prices lower, what Amazon Web Services does to keep prices lower. Furniture, is it really an issue, furniture? Believe me, you'll be able to get plenty of cheap furniture. You just not be able to I mean, furniture's going to go up in price. We've benefited.
I just bought very cheap furniture from Amazon.
Well, I think that one of the things I said this morning was, if you're worried about tariffs, go on Amazon. Because Amazon is going to give you a good price. And we keep making it sound like the American consumer is being hurt. American consumer, they have mobility. There's plenty of jobs.
So you disagree with Nike, JCPenney, Under Armour, all of those guys that wrote the letter?
I can't disagree with them. They want their earnings up. But one of the things that I have said over and over again is that the president is going to sacrifice the earnings of our companies in order to be able to win. And that is, everyone here, I think that we're not used to a president who's not captured by the interests. Meaning that we would never hurt the semiconductors because they're important. We would never hurt Nike because they're important. The president is focused on beating the Chinese. Okay, that's what he's focused on. And that means there's going to be a lot of numbers cut. And so you look at Novartis instead, or a J&J. There's plenty of alternatives. I mean, there's always people have to recognize the money stays in the casino. It just goes to different parts of it. And that's why, I mean, if you look at Darden at an all-time high yesterday, McDonald's. Okay, go there. Go buy McDonald's. Go buy McDonald's. It's okay. Go buy Wendy's.
So let's circle back to Target, because I want to ask you, you wrote a Real Money column this morning about how Target out-executed all of their competitors. So in 60 seconds or less, can you explain that?
Brian Cornell said that he was going to have the best online, best buy BOPUS, buy online and pick up on store. He said he was going to have the best of that. He was going to say that he had the most fresh merchandise. He's going to say that he had the best private label. He's going to say that the small format is a big winner, and everything he said came true. Wow. I think if you stick with Ellison, it will eventually be like that. But, he made me go to a small form store. I went to the Philadelphia one. He made me go to the giant new Target in Minneapolis. They're just doing a lot right, and that's Brian. He works very hard. He's really got it right. Congratulations to Brian Cornell. Really fabulous.
All right, guys, and now, as I mentioned before, Target is Real Money stock of the day, so you can head over to realmoney.com to read more about Target. We've got Real Money reporter Kevin Curran on it all day. You've got Jim's column. You just can't miss it. All right, so thank you, Jim. Thank you for joining us. That's all we have time for today. For all of you watching on TheStreet.com or on Facebook, we are now jumping over to our Action Alerts Plus members-only club video, where we will be digging in, to AP holdings like Home Depot and Kohl's. So if you want to know what Jim's thoughts are on those specific holdings, head over to ActionAlertsPlus.com. I'm Catherine Ross, and Jim will see you tomorrow.